If you've ever wired funds and then just instantly felt a pit in your stomach, this is why. We're going to talk about that on the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing, all the emotions that go with it. And our mission is to equip people to invest wisely, both emotionally and financially.
Yeah.
So that together we can build wealth. Invest wisely to improve both housing and, I said it earlier. That was awesome. But our ultimate mission is to build wealth while improving housing and tenants' lives so that we can build wealth. Wow.
And improve communities.
I
mean, there's lots of ways you can say this.
Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing, where our mission is to equip people. That's it. Equip people to invest wisely. I kind of skipped it because I was excited about the emotional part.
You are excited. That was like an emotional roller coaster all in itself.
Right? Did you feel the anxiety?
I was like, oh, where's he going with this? Man. Okay, you can pull it back. I was thinking just having kids is like an emotional roller coaster. Sometimes it's like, wow, this is a big emotion. Okay. I was talking with a friend too about tools that we can use to like manage emotions, so it's sometimes I breathe. Sometimes I go for a walk. Sometimes like there's this technique that's like, just look around the room and name things that you see. Like just switch your brain.
Yeah. I was recently on a text stream where someone was asking to borrow a bicycle, and I shared with them my emotional roller coaster that I went through with my bike. So it's summertime, so we're all riding a little bit more.
Yeah.
And I have a bike that I hate, but it technically works. It's fine. I just hate it. And so my solution to that has been to never lock it up and just leave it out in hopes that someday someone will steal
disappear.
it, and then I will get a new bicycle. And well, my dream came true a few years ago. It was amazing.
You were so excited.
We got home. I think we went to
like,
church.
It's gone.
I was like, yes. Thank you. I can now get a bike. I'm so excited. Like a high on that roller coaster.
They took my bike too.
Yeah, they took yours too. And then, I kid you not, it was like a block later, found my bike.
Nobody else's.
So bad.
Just yours.
Yeah, that they discarded it and were like, no, we actually don't want this bike. So I was like, are you? So it's just like the dip on the emotional roller coaster. Like, oh my gosh, it's still there. Are you kidding me?
Some people might say, just get rid of your bike and get a new one. But
I know.
It's like you've made this agreement with yourself.
And I don't. Yeah,
You're like, as long as it works, I'll just use it.
I tried to do the technical loophole of like, technically it was stolen. Like, it was. So maybe I'm good to go. But I'm like, I have to get rid of it somehow. And I don't feel good about giving someone else's bike.
Funny.
So anyways, that was my emotional roller coaster.
Wow. Do you ever have similar feelings with properties? You probably had the gamut of.
I do, I guess. When I'm buying a place, that's the high. Usually when I sign an agreement, I don't sleep. Like I sleep very little, I should say, the night after that happens.
Yeah.
And I'm just like,
pumped.
I'm going.
Yeah.
And then like when something major breaks, it's the opposite. You're like, oh man, I got to pay for this.
Yeah.
Okay, here we go. And so I've learned to save for those, so it's less of a thing. But it's still, when you get a $10,000 electrical issue that you weren't planning on for that year, you feel it. So yeah, I think there's emotional piece.
Yeah.
Yeah, for sure. For sure. So, imagine this scenario that you've wired the money, speaking of emotional roller coasters, and your sponsor sends an update and your stomach, it's just like, you're like, oh man, what have I done? And even sometimes it performs well, like the investment's okay, but you're just terrified or scared the entire time. And again, it's not just because of the deal, it's because of whatever emotional baggage you brought to the deal. And so that's what I want to talk about today is some of those emotions around it, some of those roller coasters, if you will.
Yeah.
And really, they're like, these are 7 saboteurs of smart investing.
Yeah, traps or...
Yeah, that might hijack otherwise smart decisions. And so, I want to talk about
this is not necessarily like after you've decided to invest. It's like at different parts. It's as you're looking at a deal, or maybe you did choose to invest, or you're rethinking things. It's like
exactly. So I kind of want to go over them. I want to identify what are these 7 different emotions,
Mm-hmm.
and just kind of what you could do about them or how to handle them.
Yeah.
That's kind of my thought process.
I love that. So let's start with fear.
All right. That's a big one.
So this is the overthinker. So what does the overthinker or the fear-based person look like in a passive investor?
Yeah. So there's someone who they're always asking, like, what if this goes wrong?
Mm-hmm.
Right? It manifests itself a few different ways. The big one is analysis paralysis.
Right.
They're constantly
just thinking and
stuck
running
in
scenarios.
Yeah. Or just regularly second guessing. Oh, should I do it? Should I not do it? Our son is that kid. And
indecisiveness.
Indecisive.
Yeah, you're
waffling.
And
it's just and it's not necessarily like, I think sometimes with him, like he defaults to the no. No, I don't think I want to do it.
Yeah.
And you gotta like talk to him about it. And
I don't know where he got that from.
I know. And then oftentimes it's just, they just pass on stuff where you're just like,
yeah.
dude, this is a no-brainer. You should totally be doing this. You've got the funds. You've said you wanted to do it.
That's what I was thinking.
What's going on?
Most often it seems like in real life, that's how it plays out, is if someone has this fear of investing, they just don't do it. They just say no.
Yeah, that's true.
And great things come along and they just say no.
So yeah.
But I mean.
Yeah.
Yeah.
No, it's true. Yeah. And they miss out they miss out on things like that.
Yeah.
There's a few things that you can do to try to overcome the fear piece of it. The first one is just get really clear about why you're investing. Like what's your reason for doing it?
Yeah.
And using that to try to overcome any fear you might have, like to have a very strong why.
Yeah.
What's
that passion that is kind of driving you will maybe push you past the fear.
Correct.
Because you're like, okay, I'm afraid, but this is worth it because this is my reason for, I want to provide for my family, or I want to take this really cool trip, or, whatever it is.
Or I want to support affordable housing or whatever.
Right. Yeah.
Another thing that you can do is you can create some preset criteria. Like we do this when screening tenants, right? I've got like, these are my list. If they meet all of them, cool, we're good. I don't think about it anymore. I did the thinking ahead of time.
Interesting.
When it wasn't emotional, when it wasn't a specific deal. And I've got, by the way, a really handy due diligence checklist that can help you figure out what those criteria are ahead of time. But you might say something like, I only invest in this area. I only invest in these types of properties. I only invest when the returns are this.
Yeah.
I only do these size of deals.
Yeah.
I only work with these types of people. Like you can set all those criteria.
Would another way of saying that be if you do your research or gather information ahead of time, then that kind of lowers the fear factor of things because there's less unknown?
Yeah, I guess. Yeah. Oftentimes you
level.
don't know what it is until the deal happens. But yeah.
Well, I guess when you're doing your due diligence, though, that's
not
necessarily before you find the property, but
yeah, I guess it's like okay, that's a good. I see where you're going with this. I think like when I'm screening a tenant, I've got my criteria.
Right.
I don't even think about a yes or no until I work through my checklist.
Yeah,
and then only after that's
gathered
done,
all the information,
and for me it is like a literal like numbers going down the side, and I count them up, and either it's above it or it's below it. It's that straightforward.
It's obvious. Yeah.
I've taken the emotion out of it.
Yeah.
So maybe I think what I'm hearing you say is instead of trying to make snap judgments and try to like refine your decision along the way, it's like I'm not even going to decide yet. I need to take in all of this stuff, look at all of it, answer my set of questions, and then only then will I make a decision.
Yeah.
Yeah. Okay. I think also related to that is you just want to set a time limit on yourself. Especially if you're an analysis paralysis type of people, be generous with it. Be like, I am going to devote whatever 2-3 hours to this. Yeah. It doesn't have to be 20 minutes, but like I am going to spend the time to go into this. I will do it. And I think if you have that checklist, like that helps because it's just like, I'm just going to go through this. And then based on that, I'll make a decision. Yeah. And if you find that you're still passing on good deals, then it's like, okay, I need to evaluate my checklist. Maybe I am being a little too picky. If you're like, I need to make 30% return each year, you're like, yeah, good luck with that.
Yeah. Yeah, it may be helpful to meet with someone else or meet with another investor or with your sponsor.
That's a good one.
To kind of go through some of that and be like, okay, I'm stuck here. How do I keep moving forward? Like, where am I stuck? Where do I need to adjust?
Yeah, yeah.
Because maybe some of those expectations are a little too high.
Yeah, potentially.
Or
it's
scary.
not necessarily expectations are too high. It's just you're afraid of too many things.
Yeah.
What if a black hole develops and or a sinkhole and my property goes down, or there's a massive earthquake or fire?
Yeah.
It's like, it's like, yeah, they do happen, but yeah. So there you go. There's fear.
Okay, so let's talk about greed.
Greed.
The person who is motivated by greed or the jackpot chaser, and how do they sabotage their own success?
Yeah. And I got to be careful sometimes that I'm not this guy because I like big numbers.
Yeah.
You know, I mean, so oftentimes, you know, these are the guys where what they're going to tell you is like, these returns are insane, you know, that kind of thing.
Yeah.
Right. And so they're just like potentially like a red flag or a sign of them, an indicator, is that they are ignoring red flags like unreasonably high IRRs. Like, again, if you see an IRR like 34%, you should be asking a whole lot of questions.
Right.
Instead of being like, oh, this is great. This will be an amazing, I'm going to, you know, quadruple my money in 4 years.
Yeah. So if it sounds too good, maybe check to make sure you're not just jumping in because it sounds really good.
Yeah. Yeah, exactly. Or, and this is something I've had to fight, if you have a home run deal, comparing everything to that and being like, man, I want the, you know, like ours, I want the 144% average annual return because we've got one of those and it's amazing.
Yeah. So because you have this comparison, you look at other deals and nothing is good enough.
Correct.
So
or you're trying to do things to tweak the knobs to make it that deal.
Which is like,
yeah.
Or
you're getting disappointed because it doesn't. You're like, oh, geez, I only made 20% on this one. Which everyone else is like, that's amazing.
So
You're like, no, but I had this other one where I doubled my money. You're like, yeah, okay. Like,
yeah, I could see someone, if they were motivated by the numbers or by greed, they were just chasing numbers, they'd pass on a lot of things that you're like, that's good. Like, that is good enough. It is great, you know, and they just hold out and wait and miss a lot of great opportunity.
Yeah. Yep. Another one is they just over allocate towards aggressive investments. They're doing a
more high risk
development projects, more high risk because they're trying to get
higher returns,
those bigger returns.
Yeah,
and you know you got to try to decide what your.
So there's this line then between like ambition and greed, because if you're like just getting after it and finding great deals, like that's not necessarily bad. So where's that line?
Well, I mean, as a passive investor. Again, it's this emotion. It's your mindset, right? You're like, oh, I want to earn a little bit more. I'm not earning enough. This one's not good enough. Like that's what we're trying to address. And so I think it's like, yeah, it's great to keep looking for deals.
Yeah.
And I passed on more than I don't, obviously. And part of it is I go, man, I got a standard and it's not going to hit it, which is part of it's a little bit greedy, but I'm okay with that.
Yeah.
You know, and so I think that's okay. Yeah. So things you can do to try to overcome the feeling of greed. The first one is you just got to focus on those risk-adjusted returns, which in a lot of ways is like, yes, you have your top-line numbers, but like you got to pay attention to some of those other numbers, right? What are the vacancy rate assumptions that they're doing? Are they dependent upon a refinance to pull this off? And what are the assumptions around that? I think you got to look at some of those, like what are they assuming for ongoing like inflation for both rents and for expenses. Like I think there's things like that that you want to pay attention to some of those things to not get caught up in those big awesome numbers.
Yeah.
Ask more questions. You also want to ask like what's likely to happen, not what could happen. And I know I run into this trap. I'm like, oh my gosh, this thing could pop and be huge. I love it. But it's like
actually grounding it in some reality.
Yeah, I think that's super important. And I also think, and this is another one I struggle with, is like you can't chase deals. You can't like I've pushed to try to make stuff work because on paper it seems like a great deal, and I will work and try to do it and like start. It inevitably gets a super complicated deal.
Okay.
And my experience has been like, that's me chasing it.
Yeah.
Trying to get this awesome return.
So your greed can often get you in trapped in this position that you're like, oh, I made this more complicated than it needs to be, and it's now not a great deal because
and
instead
you gotta have that like, no, I'm just vetting them. It's just coming my way, and I got my standard.
Right. And if it's great,
and
if it doesn't,
cool.
Let it go.
Yeah, exactly.
All right.
Yeah, I'm at we're looking at something right now that has that potential to be chasing it because on paper it seems like it could be really cool, but it's trying to have that like. Just that mindset of like, nah, like we'll make our offer for what makes sense, but
don't force it to make it work.
I'll force a little bit because that's who I am. But but trying to find that balance, I guess.
Okay.
Yeah. So that's the old jackpot chaser.
Jackpot chaser. I feel like this next one has the same sorts of undertones, kind of, but it's the veteran. So you skip the briefing. The veteran who skips the briefing. It's the overly confident.
Yeah.
I know what to look for. I know what I need to find. I don't need to research this. And
there's an arrogance there.
Yeah, this arrogance. So tell us more about this type of mentality or this emotion that could get in the way of investing.
Yeah, so someone like this, they're gonna skip over reading all the legal stuff because they're like, whatever.
I already know that.
These. It's funny. So we actually we bought a place, and even our title person was like, "You've seen all this stuff." And I'm like, yeah, I have. But that's part of that, like, but for that stuff, I've already looked at everything. And so that part's fine. But it's having that, just like, oh, I don't need, whatever. I get this. I think there's things where like you said, it's very similar where they're overlooking some underwriting assumptions. Like they're not even, there's a difference, like on the greed person, they're kind of ignoring them in the sense that like, oh yeah, it's fine. Like, but look at the return. And they're looking at like what could be the outcome. Whereas this one, like they're not even looking at it.
Right.
They're just like, yeah, it's fine.
Yeah, they just look at the basics and assume that it looks great.
And maybe they're taking some shortcuts on a sponsor vetting. Now, I'll admit, me as a sponsor, I like that. That's what I try to do. I try to get to a point where they go, I don't even care about the deal. If you like it, I like it. And I try to build that kind of trust with my investors. And I have that with a few people.
But not because you're taking this mentality.
Yeah, right.
It's because you're working hard and
and again, that's like, and to some degree, I don't want them to take that mentality because if things do go sideways, I don't want them to be surprised.
Yeah.
But at the same time, I do want them to have that like, I'm going to give Jim the benefit of the doubt that he's done all the work.
You want them to be confident in your skills.
I've proven the track record. So it's kind of a weird deal. Yeah. So, and so in some ways what it's done is it's killed your curiosity, right? Because of past successes. And so some things to overcome that, right, is you want every deal to feel fresh, right? You do want to go through the checklist like we talked about every single time. Like I have that with tenant screening. I've gotten to a point now where I can have a 10-minute conversation. I'm like, I'm pretty certain I know whether or not it's going to be a good fit or not. Yeah. And then I walk through the checklist and I order the reports and I do the numbers and I do the math. And, 99% of the time I go, yep, this is what I thought. I get it. But I run through it every time. Part of it's for me, it's for a liability standpoint. I want to be able to say like, no, everyone went through the same process. Like I wasn't trying, it was this external objective thing, but that's part of it. And, and like I said, you just want to have that beginner's mindset as much as you can. I mean, you want to be sophisticated about it, but, and ask the complicated questions. But the beginner's mindset in that, like, you just want to have that curiosity. I do want to look into this and look at it with fresh eyes. Yeah,
so you can avoid skipping over some details by just continuing to be inquisitive, asking questions, wanting to know.
Yeah.
Even though you think you might know the answer, still ask.
Yeah, wouldn't it be nice to be in that kind of spot where you're like, man, I just do so many deals. Like, I don't even have time to fully vet these things. I just don't worry about it.
I just pass them through.
I'm not there. Every deal for me is different and weird and interesting.
Sure. But, I don't know. I like knowing the ins and outs of things because then you're not surprised either. You've run through different scenarios and thought through it. It's not just this, oh yeah, it'll be fine. I'm totally I've seen this before. Yeah. And then you're sideswiped as a sponsor too. Like, oh.
I love it when I'm talking with investors for my deals and they start asking questions. I'm like, oh, okay, you read this. Like you saw what I saw. Yeah. And you're honing in on it. Right. And I try really hard not to get defensive. And I go, yeah, no, that's totally a risk. Here's what I'm doing to mitigate it. Yes, 100%. I see what you saw. Yeah. And it happens. It's rare, but it happens when someone sees something where I go, oh, I hadn't really thought about that part of it. And it doesn't happen a lot, but definitely like it's there. And part of me is like, dude, I'm glad that you saw that and caught it. It's not for me like back to formula. That's a Spider-Man 1 reference. But it's a, okay, let's incorporate this. How can I do to mitigate it? Let me update the numbers, that kind of stuff, which is important because I'm like, it's it's good to know.
Mm-hmm.
Yeah, so I like it when people catch stuff and tell me about it. I'm totally okay with it. Like, I don't want to lose money.
Yeah.
Then I'd rather find out about it before the deal happens.
Yeah, absolutely.
Yeah.
For sure. Let's move on to this next one.
Mhm.
Impatience. So this one is called the deal drifter.
Uh-huh.
Why is this so dangerous in real estate investment?
Yeah, I could have also like named this as the shiny object guy.
Yeah, so always just jumping.
Yeah, well, and I was talking with a friend earlier this week, and he's kind of in this camp where he's just like,
what's next?
Yeah, it was actually really interesting talking with him because he's like, I don't think I'm behind, but I feel like I'm behind and I need to move a lot faster.
Interesting.
He's like, I look at someone like you. It's like, and you're so far ahead. I'm like, I'm also 10 years older than you. He's like, yeah, but like, he goes, I don't even have line of sight to get to where you're at. And he's like, but I don't even know how to like, I gotta go faster. Like I feel that pressure.
Interesting.
We talked about it, and ultimately I was like, yeah, it's okay, man. Like it's your own race. It's fine.
Yeah.
And but there's someone who like money's blowing a hole in their pocket. They want to make some progress. So what this looks like is they start jumping at weak deals because they're like, well, it's better than my capital sitting there doing nothing.
Right.
You know, and you're like, it's not.
Yeah.
But that's the issue, right? They're like, I'm earning whatever 4% in my high yield savings account or something. I got to put more into. They're rushing through due diligence. That's another one because they just like, I just want to go.
Yeah.
And they're more excited about just going as opposed to walking through the process.
Yeah. So I guess it might be a good deal, you know, that they're kind of throwing their money into, but is the risk that they waited, you know, a couple months and another deal came along, now their capital's tied up in this and they don't have it anymore.
Yeah.
You know, so they've missed maybe a better deal.
I think it's almost like it's the wrong mindset, you know, of even that. It's more of a, you know, when a quote good deal comes along, like that's like you do it. You know, and it's all the previous stuff. Like you want to have the criteria, you want to have thought it through, you want to have your reason. And so when something comes along that matches it, awesome. Like,
so is this person not using those criteria in anything? They're just like the next deal, they're jumping at it?
Well, it's more like, and I'm going to keep going back to the tenant screening thing because I think that's it feels like it's a tangible analogy. Is you got a place that's sitting vacant, you're losing money, and someone applies, and you're just like, thank you, someone applied, let's go.
Yeah.
And you're like, whoa, don't you want to run a background check? Like, no, I want them moving in tomorrow. Like, I'm losing rent. It's costing me whatever, you know, $200 a day. Like, they need to move in.
Yeah.
Like, I don't have time to call their landlords or run a background check or do a tour.
Yeah, so
it's
you're
that
not
kind
really
of
fully assessing risks and all the ins and outs because you just want to move forward. You want to go.
You're like, I'll get the return. It's better. I'll take the risk. You know, I'll do the defense on the late stage, which is not smart, but
yeah,
that's kind of the thought. And then for me as a sponsor, they might give me like pressures for some fast returns. Like, hey, let's return some capital. Let's do this. Let's do a refinance sooner rather than later.
Sure.
I think for a lot of these things, like, man, you gotta have patience with it, which is obviously why this one's so bad.
When you're in between deals or you're kind of waiting for that next thing to come along,
waiting for James to get his act together.
What should investors do with their downtime when they're just kind of twiddling their thumbs?
Yeah, that's a good question. Listen to this podcast for one. Recommend your friends listen to this podcast.
Yeah. All right.
We had a podcast episode that aired back at the end of May that was talking about investing with your friends, how to legally do that.
Yeah.
And one of the suggestions was to create an investment club.
There you go.
And part of what you do in the club is you would like there'd be like three legs to it. There's an education piece, there's an analysis piece, and then there's actually like the investing piece to it. And so I think it's there's an education side that you can either do with friends or individually. Again, listen to this podcast, just kind of learning. Maybe there's some networking that has to happen too. Where like, you know, if you're only connected to one person and you're like, man, they're taking forever to get a deal done. There's a lot of us out there.
Interesting.
You know, and
really
get connected with 3 or 4.
Probably a lot of it, like you've said multiple times, is working on changing your mindset to, like in this particular case, to say these activities are moving me forward. I don't have to be putting my money into a deal right now. if I'm educating myself, taking my time, learning what criteria I want to follow, finding a good sponsor, that is moving me forward, and I'm going to be in a better place.
Yeah. I was talking with someone earlier this week, and we were talking about like, he made the comment, he goes, before I enter into something, he goes, I want to have a really high percentage probability that I'm going to succeed. He's like, I want 90% or more chance of success.
Yeah.
He's like, otherwise and if I don't think I will get that, I don't do it.
Yeah.
And I had to stop him and be like, well, depending on how you define it, success, right? If it's about learning, there's 100% chance that that's going to happen.
Yeah.
So do it, depending on what it is, right?
Sure.
And I was like, but if you narrowly define it as this one return, like, yeah, I get how you're going to struggle to jump. And so I think that's part of the impatience, or that's part of the fix is how do you expand that definition of a win? Part of me is like, okay, if you got the money sitting there and you're not looking at deals, like what can you be doing to A, get more deals to look at, B, get better at evaluating those deals, or C, like work on just improving my own personal skills to increase my income so I have more funds to put towards deals when they eventually come.
Yeah.
I think those are things you can do. And just kind of embrace the fact that, they don't happen all the time. That's okay.
Yep. Those are great things. Next, let's talk about the FOMOs. Oh, the FOMOs. So hard. We've all felt FOMO. And I want to know, how does it show up in real estate through the crowd follower?
Yeah, so there are people who it's like, hey, all my friends are investing. I'm going to get in and do it. Classic.
I gotta do
They're
it.
all jumping off a bridge. I'm jumping.
Yep.
That kind of thing. I think it's also they'll overly rely on testimonials from other people instead of the metrics.
Sure.
Which honestly, sponsors like myself, we do webinars to announce deals because you get this type of, oh man, look at all the people who are on. I want to get in, and they get wrapped up in the narrative instead of the numbers.
Interesting.
Which again, like for me, I'm like, yeah, I kind of half want that. I mean, I try to pick a deal that the good numbers are good, and then I use all the emotional triggers I can to get people to act. Yeah. Because I'm like, dude, this is a good deal, but
that's the foundation of it. It's a good deal. You're not just signing people up to sign them up.
Right. Or the other one, and again, I do this. They jump in a deal because they feel like it's filling up.
Oh, okay.
And I actually will say like, hey, we're 50% filled. Subscribe.
Interesting. Yeah.
We're 75%. We're 90%. Whatever.
Right.
It is.
So their opportunity to invest is like, it's
which
going
part
down.
is like,
I gotta move.
This is real. I need to let you know. Like, you need to make a decision sooner rather than later.
Yeah.
But it also, and my whole thing is like, I just got to get them off the fence, get them away from the analysis side, and employ a little FOMOs.
So you're kind of, it's super interesting. The people who don't necessarily have that, who have some of these other things going on, like, I'm afraid I don't really know. You want to increase a little bit of that feeling of, get in now. This is a great deal.
Yep.
So that can be a good thing, a good motivation.
I think there's a couple things that you can do to fix this. Surprise, surprise, my due diligence checklist is amazing because what it does is it goes, create your own process, create your rubric, and run through it every single time, regardless of what anyone else does. Even ask yourself, man, if no one else was investing in this, who I knew or whatever, like, would I do it? Yeah. And I think that's the fix to the FOMO piece.
Right. You don't base it on what everybody else is doing.
Correct.
It's based on your own system, your own criteria.
Yep.
Yeah. Your
100%.
own why.
Yep.
That totally makes sense. So is there ever a time where it's smart to follow other people?
I mean, if you're following smart people, that helps.
Yeah. What's the Ford quote? Isn't there a Ford quote where he's like, I surround myself with smart people? There's something.
I think there's the story where they're like interviewing him, asking him questions, and he kept bringing in his teammates to answer the questions, and they're like, "Dude, Ford's not that smart." He was like, "No, I just surround myself by smart people."
Right.
And and that was his whole your goal isn't to be the smartest person in the room.
That's the quote. Yeah.
And so, I think there's a part of that. I think it's good to if you're if you feel yourself doing that, take the deal to someone else who you do trust and be like, hey, can you look at this? What do you
that's
think?
a good idea.
Again, to stick with the tenant analogy, we've been doing this entire time. Like, I'll have people come with me like, hey, I'm looking at this tenant. What do you think?
Okay.
Like
they're like, I want to fill it. And I'm like, I've got this feeling of like, I feel like I just need to go. I need to jump on this. But is this really good?
Yeah.
Like, talk me off the ledge.
Yeah.
Just give me a dose of reality to really make a good decision. That's smart.
Yeah. So I think that's,
all right. Don't be a lemming.
To a degree.
Do it to a degree. All right. This next one probably hits close to home for a lot of people is guilt. So the people pleaser investor.
Yes.
It's like, okay, yeah, I'll give you everything.
Or it's they had an hour-long meeting with me.
Oh, now I feel bad.
And they were on the phone, and I've committed so much time to James.
Oh,
and
man,
I think
really
the only reason why he committed
money.
time with me was because he thought I was going to invest. And now if I say no, that was like wasting his time, and I feel bad about that.
Oh, that's a bad feeling.
They're investing out of politeness in that situation. They avoid asking the hard questions because they don't want to ruffle too many feathers. Or how about this one? They back weak deals to, quote, support the sponsor. James is a friend. I'm investing in James, not the deal, which I've heard, but I do strong deals, so it doesn't matter. But yeah, that's the old people pleaser.
Yeah, I could see how that could cause a problem. And so, I mean, the fundamental core of this is like the relationship clouding your judgment, right? So explain more about like how you might get into a situation that you don't even realize that's happening. Is that just like you're investing with friends, or what, like you're saying, it is someone you know, so maybe you don't have all the answers or the idea around investing in real estate and what that means.
I'm going to sound like a broken record here. I think you can get yourself trapped if you don't have a process for evaluating deals.
Process again.
Because if you don't, now you're trying to rely on other signals to figure it out. I remember when we were at the Louvre in Paris, and remember we saw that one photo where there was like a set of paintings of people who had like fruit making up their heads.
Yep.
And everyone was just walking by them. And we were like, these look cool. And so we took a photo in front of them. And then by the time that happened, there was a small crowd of people who were also like, oh, I guess take a photo. And like when we got to the other end of the hall, like there was a crowd of people around these photos because we're trendsetters. That's why. But no, like it was in the absence of any other information, you're taking cues from other people. And so in the absence of having a process for evaluating deals, you take cues from anywhere else you can. And one of them is going to be, well, are other people doing it? Was this person nice to me?
Yeah.
And I think you can especially run into problems with, like, if you're investing with family, you're going to ignore some of the numbers because you want to support the person and the relationship.
Yeah.
And you're really relying heavily on that.
So would you...
Which, by the way, to date, I don't think I've had any family members.
Yeah, I mean, that was kind of my next question was, would you recommend people to invest with family members?
Ooh,
because of these types of...
So I'm going to take it from if you
traps.
are investing passively in a deal that you like, and then like maybe you have a family member who's invested, and they're like, hey, I think this would be a good investment. You should do it too.
Okay.
Like that's that's how I would think you want to think about it. If you do, you have to pretend like, okay, if they weren't invested, would I do this on my own?
Okay.
Yes, they brought me to it. Awesome, thanks. But I don't want to, and hopefully they don't say something like, hey, I'm invested in this deal, but we can only close if we bring another 30 grand to the table. Can you help us close? That's a hard conversation.
Yeah.
I've had ones where, and again, the way I get around it is I've had people approach me of like, hey, James, you have a bunch of investors. Do you want to essentially create this fund of funds and be a big investor by pooling other stuff together into this one? And as people who I know and who I like, and again, the way I've gotten around it was like, yeah, sounds great. I want to know these 10 things, and they don't give it to me. I don't invest. I don't even look at it. So having that process, I think, is really important.
That totally makes sense. So number 7.
Number 7. This is it.
Number 7. This is
Boom.
the last.
This is all the emotions.
Emotional.
We have covered all but one emotion that are physically possible.
No, just in the realm of what we're talking about. But the last one is the nostalgic investor.
Yes.
And what recency bias looks like in this space. So the feels. This is like feels for
which
investing.
in some ways is combining a few other ones, right? Where it's the guy's like, hey, the last deal I did was great. So like this one should be
there's
too.
that aspect of it.
You know?
Yeah.
It's a bit of an emotion. But you're chasing this like, you know, like if you had a great like if you had a home run deal, it's like, so it's a little bit of like, there's a little bit of the greed. There's a little bit of the overconfidence, a little bit of the FOMOs, that kind of stuff. So, so again, part of it is like the way it shows up is they're assuming that previous success, will repeat itself.
Yeah.
You know, and just not worrying about it, which again, as a sponsor, I tout my track record.
Right.
Because I want you to be like, oh, yeah, he's done this multiple times. He can do it again.
Well, and it's kind of like, you know, it is tempting to say that future success is based on this past track record. But to some extent, it is.
Oh, yeah. No,
because you have a process and you're following it and you're finding good deals.
And I think this might have been something you were trying to hit on earlier, and I'm just putting it together now. Is like all these emotions are there, and in a balanced way, they're all really healthy.
Sure.
You know, you want to have some sense of I want more. You want to have a healthy level of fear. You want to have a healthy level of impatience.
Sure.
And of the FOMOs and of being a people pleaser. And what's the other one I'm missing? You know,
Nostalgia.
and acting like that veteran with the overconfidence. You want to have, maybe not that one, but you, you know, but to that degree
you want
of like
confidence.
Of you want to have some of that. I think that's important.
Yeah, but there's a balance.
There's
there.
a balance.
That's not the
it's
only
really,
thing you're basing it off
Yeah,
of.
it's letting one of these just really over-index and guide your decision-making process. That's where you get into a problem.
Okay.
Right? So again, these are another one who is like the nostalgic. Maybe they're ignoring some significant macroeconomic changes because they're just going, hey, it's static. It's all the same. This worked out last time, it'll work again. That's one of the reasons why I now do flips. Because our macroeconomic environment changed. I was like, okay.
You've got to do something
Can't just
different.
do this one thing. I got to change up the model a little bit, add some variety.
So
like, that's important.
Is this kind of like, I think this relates a little bit to a conversation we had a while ago about a property that was used for a particular use. And I feel like this plays into this a little bit where it's like a sponsor maybe only does certain deals.
Yeah.
Because that's what they've always done. That's what they love. You know, and this guy wants to sell his business, wants to sell his property, whatever, but can't because it's like, I want it to be used this one particular way.
Oh, okay. I know where you're going with this. Okay.
You know, and it's just like, okay, but like you're saying, the market changed, the numbers don't make sense. So I get that all you want to buy is houses that look like Little House on the Prairie houses, but nobody's buying those and nobody wants those. There's not a market for it.
Right.
You know, so you shift. You don't have this nostalgia or recency bias or, you know, you do each deal
which again,
based on your criteria.
It's good to have some of it. Like for this one to say, hey, I'm passionate about this thing. I get that it's not as profitable as it used to be. I don't care.
Yeah, you know it well, you love it. Sure.
You know, that's okay.
That makes sense.
Yeah. So the ways you can fix if you're, you know, being too nostalgic, I guess, is I bet you can guess. You got to judge each deal on its own merit. Stick with that criteria. And sometimes you got to change that criteria. Sure. And that's okay. And I think it's good to look at a sponsor's track record and at the same time, separate that from the risks and opportunities in a specific deal.
All right.
Like you got to go through the whole process. That's the lesson
process.
here.
Process.
Which, if you want to do that, oh my gosh, I've got this awesome due diligence checklist. I don't even remember now how many. It's like 179 questions, something like that.
There,
it's a lot. It's a lot, maybe like 93, whatever. It's a lot of questions. And I break it down through 8 different areas of the investment, looking at the sponsor, the property manager, the property itself, the market, the financials, the legal stuff, like all of the things.
Yep.
And I've even highlighted the ones that are specifically important. There's like 40 of those.
We've done podcasts diving into each of those sections. So
I think we still got one to go. But
there you go.
Yes,
teaser,
I know, right? Man. And so, but like that's the thing that I've created to try to help you offset over relying on some of these other emotions. So, because it's really important, because I think you either will invest in a bad deal, or you'll just never invest.
Yeah.
Because you don't have a process to do it. Yeah. And I think that's really important. So you can check that out at furlo.com. And you can also see our investment thesis. You can see my track record and how awesome I'm doing. And let yourself get emotionally excited about what I'm doing. But yeah, and honestly, you might also have some questions about what's going on and what you're seeing. And I would love to have that conversation. And so there's a spot where you can reach out to me and we can chat.
And then you'll feel obligated to invest. So you will.
Exactly. So
all make that
sorts
call.
Of yeah, exactly. So those are those emotions. I think all of them are very powerful, and if you're not careful, they can overwhelm you. But there's one very specific tool that can help, and a whole bunch of other little fixes. So there you go. Thanks for listening, and have a great day.